This is the take two of my weekend market review video because the first one somehow it's not being I'm not being able to upload it well, so I'm taking another recording. So I'll be very brief. Okay, so looking at the US 10-year, it's hitting a 3.9% level, and I think it's trying to stabilize over here because I see uh, some support at the 3.9 or 3.8%. So I'm hoping that the yield will have some stability over here. Okay, moving forward, TBT looking the same. TMB looks the same too. Okay, let's go to UUP. It's a US dollar index. So it's bouncing a little bit, but generally it's trending lower. So it's good for the stock market. H by G moving higher. That's also a good sign for the stock market. Put call ratio is pretty low. I think the currently it's below 0.6, very low. VIX is also very low. Junk bond going high, it's a good sign as well. Okay, and I go to the index. So basically what I'm seeing is across the board it's looking good pretty much. NYSE it has a tall red bar, but let's see in the hybrid version because this is faster. So okay, so we had a tall red bar, but when I see the weekly chart, it's basically forming a cup base, mostly going sideways, but forming a cup base, and to reach the 17.4k, which is the all-time high, it's got some more to go. But generally speaking, it's moving in the right direction, so I don't really much worry about it. Nasdaq going good, and it went over the previous high 14.4k, and I think it's going to challenge 16.2k, the all-time high, sometime toward the end of this year or maybe next year. QQQ is almost there. QQEW looks similar. It's got some pullback, but very slight. So going through the indexes, I don't see none. I don't see any signs of a weakness, right? I mean, gold miners pretty much the sideways. The oils going lower. It's trending lower, so it's generally good for the inflation. Copper is looking good, and natural gas going lower. It's trying to bounce a little bit here, but generally it's going lower. SMH look very strong, going high very sharply. So I think I'm hoping that it's going to pull back a little. KR is the same, going vertical. GLD the same. DBC, it's a commodity ETF. I think it's half of the competition is oil, so it's pretty much the same trajectory going lower. I have some agri names like wheat, corn, soybeans, mostly sideways or trending down. Transport. Well, transport is trying to reach the previous high. So now it's at 264 and previous high is 267, so almost there. Okay, XRT moving strongly to the upward, looking good. Yeah, so well, the FFTY, this is the IBD 50. I watch this time to time because I want to see how the growth name is doing. So for the growth names is still have so more to go. I mean, this is a very terrible chart. dropped from 52 to down to 22 or 23, right? So it has to base somewhere here and start to go higher. Then the growth investors will have better time. Okay, so I checked the FANG. Okay, mostly you see across the board it's going higher. And Google sideways, Apple moving high, MSFT, um, yeah, it's challenging all-time high, so it looks good. I don't see any problem. Meta going sideways or more toward upward. Tesla looks like it's breaking out on volume. AMD going nuts, vertical. Nvidia, pretty much the sideways but trending higher. Amazon sideways to higher on a strong volume. Netflix too. So I don't see any problem here. Okay, let's go next. So this is a take two, so I'm going fast. Okay, focus list. Okay, the spot is lowering by 2%. Vertex also. So CFR Regional Bank. CrowdStrike is moving higher by 2.9%. TCF is pulling back 2.5%, but these can be a good pullback to enter, actually. Let's go next. GitLab, going low 3.58%. XP also. So basically, what I'm saying is that these aggressive growth name, GitLab or what is it? There's somewhere on the Spot and Vertex. These are the aggressive software, aggressive growth names. So I think that the money is having a rotation again from aggressive growth name to somewhere else. Maybe the mega caps, like a FANG, Magnificent 7 or 8, or maybe the value names also. So that's probably what's happening. Mobileye. Mobileye is moving on a weekly basis plus 4.3%. Has a little pullback today, but I think this is also interesting. Okay, Baker Hughes. See the strong volume, but generally speaking, oil is going lower. See the IoT also, minus 4.6%, and so there's a pullback, but this can be a good pullback to make an entry. Probably after some time, 50-day will catch up, and we may be able to have a good entry point later on. Now pullback yesterday is now turning higher. Snow is pulling back also 1%. Money.com, see the aggressive growth name is pulling back. That can be a good entry also. That's the way I think about it. Okay, the rest. So generally speaking, I see no problem in the overall market, and what I wanted to show is this one video by Mark Bini, and in the first take I couldn't record the sound, so I just put off the plug here. Okay.
Economics and how they affect the market.
Yeah, so Mark, going off of that, what are your thoughts on the market right now?
Yeah, so I mean, we're definitely overbought. Everybody knows that. And when you stay persistently overbought for an extended period of time, especially when you come off of a correction or a bear market, you make that first rally up, and you get just a classic, what I call a lockout rally, where everybody waits for a pullback and it doesn't come. And the market just keeps marching and marching higher. And this time, very similar to some of the other recoveries like 98 and off the COVID lows. It's in a V fashion. It's coming straight up that right side. So that leaves a lot of people in the dust. And then finally, you get where they can't take it anymore, and the market's like today. We hit a new high, and the FANG as a group hit new highs today. You hit an all-time high in the Dow, the SOX, the SMH, all hitting new highs. So now you're going to really start to suck in the last of the Mohegans here. People are going to start chasing, and that's usually precisely at the wrong time. So when the market gets persistently overbought, it's a good sign longer term, but short term, it means that you need some type of digestion period. So from this point forward, if I saw more strength in the market, I'd probably sell right into it, my stocks that are extended.
Mm-hmm. So looking back to, just last month, I mean, again, it was such a strong November. Started with a follow-through day, November 1st. Really strong rally, back above 14,000 for the NASDAQ. And then just as we started getting to those July highs, around Thanksgiving, we took a little bit of a pause. Now, granted, it was only 2 weeks. Was that enough?
Well, the good news is that you've had these pauses that are very short term. I think it was 2010 where we had a rally where you didn't get more than a 1% decline in the S&P for it was like 45 or 50 days.
Yeah.
And again,
2017 was another example of that.
2017 was a really good, what I call an easy dollar environment where it just keeps marching higher, and you don't get a whole lot of volatility. It's just a lot of alpha. So that's what you're seeing here, and that's great. That's exactly what you want to see. But I think at this point we are getting to the point where it may be too much of a good thing in the short term. And the question is, are those pullbacks enough? Yeah, they are enough. They are enough. But here's the real key. And if you take a look at something like the NASDAQ, Lucia and I talked about this prior. You got this big cup with handle forming. You take a look. If you look at the monthly, you take a look at the S&P 500 on a weekly. You've got this big base. I mean, if there's a party, gonna start here, or if a party's getting going, it just started. We're just starting to emerge. I go back to April of 1995, one of my biggest years. I was up over 400% that year, and the Dow had gone into new high ground months earlier, and I didn't start really getting invested in getting aggressive until April of 1995, and that was way after the Dow had gone into new high ground. So you don't necessarily have to get in off the lows. Sometimes what happens is you get stocks that set up prior to the market emerging and moving up. That 1990 is a perfect example. A lot of stocks were Amgen, US Surgical, Ballard Medical Products, and all those. As a matter of fact, Costco, Wholesale, and Microsoft at the time were companies that very few people even heard of in 1990. They were all breaking out new highs right off the lows in October. But then there's other periods where you get the recovery and the market moves into new high ground, and you don't get those setups until later on. Usually that happens in a V-shaped recovery.
So basically, what the market is saying is that we are seeing the potential cup with a handle in Nasdaq, and if the party is starting now, meaning the new bull market is starting now, so it's just the beginning. We'll have lots of opportunities going forward. So we don't necessarily have to be in a hurry. That's the main message. So I see the same thing. My view is exactly the same actually. So we don't really have to be in a hurry. Just keep observing the market. If there's an opportunity, we enter, and if there's nothing, I just keep observing. That's what I basically do. So yeah, that's so for this week's weekend market review. This is pretty much it. Thank you for watching. Have a nice day. Bye bye.